There's a lot going on in international commerce, global commerce. The Suez is going to be shut down. It's going to mean a lot of lost revenue for Egypt, and it's going to bring step by step the end of the king dollar as the global currency reserve. They're selling a lot of treasury bonds. A lot of central banks and sovereign wealth funds, like for monarchies, are reducing their treasury bond holdings. And the natural question that guys like me ask doesn't get asked in the Wall Street financial circles. What are they buying after they sell their treasuries? They're buying gold, because what they're buying will be the next basis and foundation of the monetary system. They're selling treasuries and buying gold.
About 2 months ago, the Wall Street Journal published an article titled, "Where Have All the Foreign Buyers Gone for US Treasury Debt?" The introductory part of the report states that overseas private investors and central banks now own about 30% of all outstanding US government debt, down from about 43% in 2013. The attached graph further reveals that China, in particular, is dumping US treasuries in very large numbers. In fact, in the latter part of the year, the Asian country sold off quite a lot of US government bonds without buying any in replacement. The Wall Street Journal's article further notes that foreigners no longer have an insatiable appetite for US government debt, and that's bad news for Washington. The US Treasury market is in the midst of major supply and demand changes, the WSJ article reads. The Federal Reserve is shedding its portfolio at a rate of about $60 billion a month. Overseas buyers who were once important sources of demand, China and Japan in particular, have become less reliable lately. Meanwhile, supply has exploded. The US Treasury has issued a net $2 trillion in new debt this year, a record when excluding the pandemic borrowing spree of 2020. The WSJ article easily sums up everything precious metals analysts said about the coming financial crisis in the past year. These veteran analysts and investors repeatedly warned and are still warning that we are drawing dangerously close to a widespread financial crisis that could be fatal for the United States economy and its dominance as a global superpower. In a recent interview, Willie, the publisher of the Hat Trick Letter, speaks broadly about an impending US Treasury crisis, gold and silver revaluation, and some important hidden agendas currently being carried out by China and other BRICS-affiliated central banks. We will bring you clips from the interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thank you and enjoy.
Central banks can get out of jail, get out of insolvency, but they've got to buy not truckloads, they got to buy boatloads of gold bullion. They can't just revalue gold and have a big benefit. They must be holding what they revalue. It was about August and September, I came out with a reminder of what Zijlstra, chairman of the Bank for International Settlements, he was a Dutch banker who was elevated to the chairman of Basel, BIS. And he was done with his career around 91. He had a quote. He said this to Volcker: if 250 million in redemption of US government debt to gold, if that causes a problem, then you're dead already, or something along those lines. His name was Zijlstra. And he said, after he retired, this is in the mid-90s, he said, the central banks, he's referring to the Rothschild franchise system of central banks. If the central banks continue on the path that we're on, they're going to eventually be holding a tremendous amount of sovereign debt. And toward the end of the game, the symptom of the end of the game is rising interest rates, where they have difficulty selling the bonds. So they have to raise the interest rate, the bond yields, in order to sell them. That's where we are now. Why were they raising interest rates? Well, because of price inflation. You know, they say that they're raising rates to combat price inflation, and it's a big fat lie. They're raising rates to prevent a treasury bond default and nobody showing up at the auction failures. Zijlstra said that the central banks will find themselves backed into a corner, holding a lot of holding a lot of underwater bonds, rendering themselves insolvent. And what they will have to do is quietly accumulate a lot of gold. Quietly accumulate. So they can't talk about it. They can't tell you that the Italian, French, British, Japanese, American, Chinese, they're all buying tremendous amount of gold. They're not going to tell you that. They'll let the word out that their official holdings are increasing, but they don't talk about their sovereign wealth funds, like SAFE in China. I believe the Fed has got double books. They got another book that shows their gold holdings, and they're buying a lot. And they withhold the supply to dealers, and they shut down their bank accounts, and they make life difficult for little people like us to buy gold and silver because there's not a lot of supply. And the reason is the big banks are buying them. Okay, Zylstra said that when they get themselves stuck into a corner of insolvency, holding a tremendous amount of underwater damaged bonds, they will accumulate gold and lift it to 5 and then 10,000 per ounce and realize the benefit. Okay, this has precedent. I think it was Franklin Roosevelt who confiscated gold at something like $25 an ounce, and then they revalued it 37, and it helped the banks. I know it sounds like small numbers, but add some zeros to that. Imagine, buying at 250 and selling, raising up to 370. Imagine at 2,500 and raising to 3,700. It's the ratios that matter. I think the big banks, the central banks, are all buying gold. Remember, the Basel III rules made gold a tier 1 asset, and we haven't seen any indication of a follow-on effect in the news of something based in an event. We've seen no events that exercise the Basel tier 1 gold status. None. Zero. Does that mean they're not doing anything? No. It means they're not telling us that they're doing anything.
Jim believes we are, in fact, already in the midst of a global gold and silver price revaluation. He describes the current phase of the exercise as the heavy volume accumulation phase, during which central banks try to buy as much gold as they can in preparation for the huge, impending collapse. He predicts that these central banks will continue accumulation and planning without completely showing their hands until there are stronger indications of a big stress factor in the US Treasury market. Jim adds that the world is transitioning from the dollar-based global monetary system to one built on the stronger foundation that is gold. However, they will do everything to delay or even stop this transition, and when everything fails, they take us to war. Let's get back to the video.
But the Chinese have exited the LBMA. 10 banks are no longer part of the LBMA. And it wasn't more than about a month that London announced that all of their gold contracts will be denominated in Chinese yuan. Let that sink in. The London gold futures contracts will no longer be in dollar. Let that sink in. What that means is the differential between the COMEX gold price and the Shanghai gold price is worth watching. What I've noticed now, Chris, is that a couple months ago we had $115 higher Shanghai gold price than COMEX. I call it the gold delta. The delta for Shanghai was 115. Then it came down. They knocked down the Shanghai price. Then it went right back up to 70, 80, 90 for the delta. Shanghai being higher than COMEX gold price. Now what you're seeing is Shanghai is lifting it up because Shanghai is not associated with London. Shanghai is lifting up the gold price. Let me put this in a different form with an elevated emphasis. China's determining the gold price. China has captured control of the gold price. China is running the gold market, and silver will be attached at the hip. That's why we saw 2150, 2160 for the gold price recently. Of course, they're going to knock it down. But let me make this is a hunch, okay? The people who are knocking it down are the people doing the naked short selling, but also the people who have weak knees. They don't believe the 2150 is going to hold. They're waiting to see how far down does it come. Well, if it doesn't come down a lot, they're going to be buying back again. So the same people who drove it up to 2150 are going to drive it up to 2200. And then they're going to knock it down again. It's not going to come down a lot because London is not in the gold market of London. Did I say I meant Shanghai? Shanghai is not part of the London gold market. Shanghai is going to be running the gold price. Wave after wave after wave. Of course, there'll be sell down. So what? Eventually, we're going to see the COMEX shut down. They don't have any gold. They're not setting the price. So what are they doing open? If they're not going to be making any money by selling futures, then maybe they don't have enough money to pay the electric bill. Maybe they won't have enough money to pay their rent. And maybe they'll shut down. And my joke is maybe they'll have big backup in the men's room and there'll be fecal matter all over the trading floor. So they have to shut down for health reasons. Health reasons is a really big reason in the last few, the health factor is a really good reason in the last 3 years for shutting things down. Maybe the COMEX will be a victim of health shutdown. I don't know. I don't care. But I expect that they're going to have lawsuits. They're doing too many forced cash settlements. I expect the COMEX to shut down. I'm really anxious to see what will be their justification. But it is so important. And my colleagues have said, Jim, Shanghai has taken control of the gold pricing mechanisms. They're going to take control of the oil price mechanisms and the industrial metal mechanisms and coal and maybe lumber and maybe agriculture. We might be seeing a shift now from COMEX in London to Shanghai for the commodity markets. And that is where the BRICS come in. Shanghai is going to be the market for the BRICS nations. This is going to get really big, really, really big.
Commodities traders and analysts like Jim have been talking about gold revaluation for years now. Under normal circumstances, that would have happened a long time ago, especially to help the US government get out of its massive debt load. But for some reason, the government is still trying to keep up the charade that all is well with the economy. The consensus of first-tier liquidity providers is that this cannot continue for much longer. With time, as the Treasury Department issues another trillions of dollars worth of bonds with reduced buyers and higher yields, they will have no choice but to revalue whatever is left of the gold in Fort Knox. If the revaluation does occur as Jim is predicting, we could see gold prices quickly hit $5,000 and even $10,000 per ounce. Do you agree this is happening in 2024 or much later? Please drop your comments in the comments section below. Hit the like button and subscribe for more videos on gold, silver, and other metals and commodities.